It was 2002 when you left Goldman to start this firm. You own 100% of it now. Why did you leave Goldman to do this?
I just thought there was such a huge opportunity in the fintech space. You know, I had spent my career in the financial services group at Goldman Sachs and started focusing on fintech there. And there was a ton of bankers that wanted to focus on the huge financial services deals and a ton out in the West Coast that wanted to do the tech. But fintech was falling between the cracks and people just weren't focusing on it as much. I saw a huge opportunity.
What's amazing that most people don't realize, I hadn't realized when I started reporting on this, was it's a 160-person firm these days.
Yeah, hard to believe.
So where do you find your talent from? What's the average age of a person at your firm? I know it's quite young.
Average age? Well, first of all, we have an amazing team ranging from people coming right out of college at 22 up through very, very senior managing directors. So average age probably 30, 160 of us, so a pretty young crowd. Keeps me young and working hard, yeah.
Are you finding that people don't want to work for the large banks anymore? I know that some people are kind of reticent to work for these firms when they want to work for technology firms. Instead, you're right at the center of both of these things.
Sure, I think as the bigger firms like Goldman Sachs got bigger, it became, more the big company versus sort of the boutique. So it's the same thing. Or do you want to work for a very large private equity firm or go work for Sequoia? So I think the boutiques are kind of taking some of the best people and really focusing them. So it's a great career building opportunity for them as well.
I think that a lot of people forget is that the most valuable startup in America these days is a fintech firm. It's Stripe. There's been record amounts of money raised into financial services, technology in particular. Are we in a bubble in this space?
Are we in a bubble? Yeah, I would say a couple things about that. Number one, I think there's been a few bubbles already. You look at the Bitcoin space, Bitcoin going from X to 100X and blowing up. That's been a bit of a bubble. You saw the alternative lending space with Lending Club and On Deck, go boom and then bust. So I think you've seen a lot of mini bubbles. I think today we're not in something I would call a bubble like in 1999 or in the financial crisis. You're seeing, I think, valuations get up there with a Stripe at 35 billion. But I think what you're seeing in my world is people doing a ton of due diligence, people have learned from lessons of the past and really making a lot of conviction around their bets. And I don't think we're in a bubble at all.
So a lot of the firms that you work with, you've raised a lot of money for. They've become unicorns. Marqeta, for example, AvidXchange is another one. Do these companies want to go public? Would they rather sell themselves? We're seeing these companies stay private for so long.
Right.
How long can that last for?
Right. I think it's one of the tough things is that you haven't seen much M&A. You have seen some. We sold a company called Assurance to Prudential not too long ago, and you saw PayPal buy Honey. But those are few and far between. So I think most companies are thinking about the exit being an IPO. You can only count on really two hands in the last 20 years, when a large financial services company's actually bought a fintech.
Well, speaking of, there's big tech companies also entering financial services in a big way. Uber Money, for example.
Yep.
Everybody on Wall Street's really worried about what Amazon or what Apple will do. How are these companies going to compete? Does fintech matter when the big tech really is entering this space?
Sure. We've been predicting for probably 10 years that nothing was going to happen until sort of now. And so now you're seeing Google get into actually online checking. You're seeing Amazon do lending and credit cards. You're seeing Facebook with Libra. And of course, Apple with the Apple Pay and the Apple Card. I mean, they're really making a big dent. I think it's causing some waves. And I think it's going to put a lot of pressure on the large financial services companies to act. And that's why I think you're seeing some of that action with a Prudential buying Assurance. They're seeing huge opportunity in tech and AI around financial services. So. And I think it's going to probably cause some issues with startups as well. I mean, if you can't get the relationships with the big e-commerce companies and they really start to get powerful over the next 10 years, there could be a lot of disruption around that itself.
Steve, you also own 100% of FT. What do you want to do? You're a startup yourself. Do you want to go public? Do you want to sell a part of yourself?
As much as we sort of advise our clients on doing M&A, raising capital, and going public, there's nothing like sort of being private and being able to just stick to your knittings. And, like I always say, Goldman Sachs was private for 130 years, and eventually they did something, went public in 1999. So we're just thinking about staying standalone and having a lot of fun doing it, building our own company at the same time. So it's great fun.